Donald Trump's presidency was marked by bold moves. One of the most impactful was his approach to trade, specifically his use of tariffs. Tariffs are taxes on imported goods. Trump used them aggressively. He believed it would protect American jobs and businesses. However, his decisions caused significant ripples in the stock market. Some even accused him of manipulating the market for personal gain. Trump's tariff strategy was anything but consistent. He slapped tariffs on goods from various countries. China was a primary target. Canada and Mexico also felt the heat. These tariffs weren't permanent. Trump often reversed them weeks or months later. This created a climate of unpredictability. Businesses and investors found it hard to plan for the future. This back and forth had a name, the Tariff Tango. It was a dance between protectionism and free trade. The problem, the stock market was the dance floor. Every twirl and dip caused a tremor. Investors hate uncertainty, and Trump's Tariff Tango created a whole lot of it. The big question is, was this intentional? Did Trump use tariffs to manipulate the stock market? Or was it simply a case of unorthodox policy having unintended consequences? Let's dive deeper into the evidence and see what we find. The stock market is a fickle beast. It reacts to news, both good and bad, and it really doesn't like surprises. Trump's tariff moves were a constant source of both. Every time he imposed or lifted a tariff, the market would gyrate. This volatility was a headache for investors. Remember March 11th, 2025? Trump hinted at higher tariffs in a speech. The Dow Jones Industrial Average, a key market index, promptly tumbled 478 points. That's a 1.14% drop. The S&P 500 and Nasdaq also felt the sting, falling 0.76% and 0.18% respectively. The market was clearly spooked. But wait, there's more. The very next day, the markets rallied. The S&P 500 gained 0.5% and the Nasdaq climbed 1.2%. What changed? Some positive inflation data helped, but the underlying tension from the trade war remained. The market was on edge, waiting for the other shoe to drop. It wasn't just the numbers. Investor sentiment was souring. The uncertainty was taking a toll. CNBC reported that investors were sick and tired of the tariff chaos. Business leaders were equally frustrated. They needed stability to make long-term plans. The tariff tango was making that impossible. The accusations of market manipulation were never far behind. The timing of Trump's tariff moves raised eyebrows. Imposing tariffs often coincided with market dips. Lifting them often preceded rallies. This led some to a troubling conclusion. Was Trump using tariffs to profit from market swings? Here's why this is a problem. If someone with inside knowledge about upcoming policy changes uses that information to buy or sell stocks, it's insider trading, it's illegal. And while no concrete evidence has emerged, the possibility is deeply concerning. The Washington Post, in a scathing editorial, implied that the timing of these tariff moves warranted further investigation. They argued that the rapid shifts created opportunities for those in the know to profit. Imagine knowing a tariff was about to be lifted. You could buy stocks low knowing the market would likely rally. Legal, maybe not. Ethical, definitely not. Of course, correlation doesn't equal causation. Just because the timing was suspicious doesn't mean manipulation occurred. But it does raise uncomfortable questions. Questions that deserve answers. Transparency, as always, is crucial. The Trump era was a tumultuous time for the stock market. The tariff tango left investors and businesses reeling. The volatility and uncertainty hampered economic growth. While the market weathered the storm, the scars remain. The key takeaway? Economic policy should be driven by sound principles, not political maneuvering. Using tariffs as a bargaining chip might seem clever in the short term, but the long-term consequences can be severe. Transparency is paramount. When leaders make decisions that impact the market, they must be clear about their motives. Any whiff of manipulation erodes trust, and trust is the foundation of a healthy economy. So, was Trump's tariff tango a deliberate attempt at market manipulation? The jury is still out, but one thing is certain. His actions had a profound impact on the stock market and the economy as a whole. And those impacts will continue to be felt for years to come.